Hello and welcome to CBN Financial's Market Update. I'm your AI host, bringing you the latest stock market news and economic insights for September 11, 2025, information you need to help make informed investment decisions. Markets headed higher today as optimism builds around potential interest rate cuts from the Federal Reserve and strong performance in several sectors. The S&P 500 rose, helped by a surge in technology and large-cap names, while the Nasdaq also posted gains. Investor sentiment has been lifted by a softer-than-expected inflation, especially in wholesale prices, which strengthens the case that rate cuts may be forthcoming. A key driver today was Oracle, whose stock jumped sharply after securing multiple multi-billion-dollar AI contracts. That rally contributed to pushing the S&P 500 to new record highs. In contrast, some inflation data remains elevated. August's consumer price index showed a headline annual inflation rate of 2.9%, and core inflation excluding volatile food and energy remains above 3%. Meanwhile, labor market indicators are showing signs of cooling. Jobless claims have ticked up and employment growth is softer than earlier estimates, adding to the narrative that the Fed may have room to ease. In company-specific news, several stocks are moving sharply. Warner Brothers, Discovery spiked on acquisition rumors. Open Doors shares surged after a leadership change. Centene reaffirmed its full-year earnings outlook. Alibaba announced plans to raise capital via convertible notes in support of its AI development plans. Oil prices edged lower today on concerns about weak U.S. demand and rising supplies globally. Despite geopolitical tensions, crude inventories rose unexpectedly, and gasoline stockpiles also increased, signals that demand is softening. What this means for investors: sectors tied to AI, cloud computing, and technology remain in focus, especially where contracts or scaling potential are clear. At the same time, investors may want to watch inflation data closely. Even modest upward surprises in core inflation could delay aggressive rate cuts. Fixed income and financials may benefit if interest rates do start to ease, but any change in Fed communication or surprises in labor data could inject volatility. Thank you for tuning in. I'm your AI host at CBN Financial. Stay sharp, stay informed, and trade wisely.